All right, in this video, we're going to go over the Lux Algo AI Signals. And this is a really new innovation that Lux Algo recently put up with the new update that really cleans up the signals that come from the overlays with Lux Algo. So going right into kind of how it works, we're going to go straight to the update notes. I think that'll be the best way to really understand what's going on. So the way that the signals with AI classification works is that the toolkit is able to classify generated signals by using a simple machine learning algorithm into four levels. Now, what I like about it is that it can help me um, sort out and kind of clean up the signals as a whole because you also have what's either trend continuation signals, which is three or four, or reversal or retracement signals, which is one, two. So I like to trade with the trend. So being able to trade with the trend for me enables me to have higher reward to risk while also having a good number of opportunities. Because if you're a true reversal trader, you may have limited number of opportunities, but those opportunities could have higher chances of going in the wrong direction if the trend hasn't finished yet. So with the AI signals, I'm able to kind of clean things up. And what you can do is you can actually combine it with different aspects of Lux Algo to really get a clean look at the market. So what I want to do here is I want to take a look at Lux Algo with the price action concept. So using AI with price action concepts. And what I'm going to enable is the trend lines. And I'm going to make it a little bit more strict and go to 8 here. And what it'll do is going to give me a good level to kind of come forward with. So what I could look for is a couple of things. One, I can go into Lux Algo. Let's just focus on the imbalance lines for now. We'll focus on the trend lines later. Go on the imbalance lines. What I like to do is I like to extend the boxes out about 50. So that way I can see the extension and it'll give me good areas to consider when coming into the markets. And right away, you can kind of see where things are going. So you have an uptrend that has a small downtrend, like a counter trend that happens for a little bit. But what happens here is that if you go here, price makes a what's called a change of character. That is the equivalent of a slight market reversal or a momentum shift. Change of character meaning when this candle closes this upper high. So you get a high here, candle closes above it to break the market structure. You get a higher high form here, and what I like to do is trade according with trend and market structure. So you have that. You have trend being enabled here, the uptrend, and market structure. What I like to look for as far as after I confirm those two things is I like to look for high reactive zones within the market. So you see right here, zoom in so that way everybody can see it. You have an imbalance zone. So imbalance zones are just price gaps in the market where price hasn't traded out to balance out the orders in that area. Market acts like a magnet to this zone. So a lot of times imbalances are going to get retested. So after that imbalance is created, you get the retest happening here. And one way you could simply trade it is that you can let it react off of this imbalance zone and then wait for the AI signals to confirm the upward move. The second way you can trade it is to let it get into this imbalance zone as long as it doesn't close below it and invalidate it. As soon as it closes outside of it, you can look to enter. But with the AI signals, it gives you more confirmations. And what you can do to even adjust these signals is you can go to the signals and overlay part here. We can go to 6 for signal sensitivity. And then right now it's set to 3, 4. When you first put it on, it's probably going to be set to 1, 2, 3, 4. So it can include both the reversals and the trend continuations. I only focus on the trend continuations. So what that does for me is it gives me areas in the market where I can consider price. So you get your entry here. This entry would have been a pretty good return with very little drawdown. Going above 150 pips, probably 200. Way I would have did my stop loss here is I would have done it at the bottom of this imbalance zone that got created. So I would have had a trade that looks similar to this. So I would have had my entry there, and I would have had my stop right at this 50 pip line, and I would have either traded to a relevant high, which would have been here, or I would have waited for the X, or I could have waited for the opposite trend to continue there. But easiest way to do, if you don't want to wait for the trend to completely reverse on you with these particular settings, is just let your judgment be the best judge. Either go to a relevant high like this, or you can just go until the take profit X shows up. So that would have gave me a nice almost 2-to-1 reward to risk here, well 1.5 to 1 reward to risk. So that's one way I would have traded it. The second example, the second example I would have done is I would have waited for the next retest of an imbalance zone. So I would have got that here, and there was a slight consolidation that happened right in here. And what the AI signals did was waited till price got outside that consolidation, retested the upper end, and then gave a strong close. And right there would have been my second entry using this particular strategy. So I would have got in, would have went to the bottom of this last imbalance zone, and I would have went to either the X showed up here, or I would have used this as a relevant high to target. And either way, I would have got either 1.5, or if I would have waited, a 2-to-1 reward to risk ratio. So these are ways that you can enter using the AI classification.